Alrighty, so I think we're back up. I think we are back up and running, guys. Let me know. Yeah, the internet's a bit iffy. Yeah, so I'll just make a note of this here. I'll post my my Discord link in the community tab. I do have a Discord. I don't know what happened there. We kind of went off board. We were halfway through the the live stream, and it just closed off on us. But that's okay. I still had a bit more that was in the tank, so hopefully this is all right and this stays all right. So yeah, this is kind of what we're talking about before, right? This is what we're talking about before. So who we got here? Four people. That's all right. Most people probably would have left, but we're going through this, right? We're going through this. We've got 6 now. We've got 6. I tried making a new stream, and then that one kind of closed out as well after like 19 seconds. So yeah, here's what it is. So this is called 3.5. I'm gonna name the other one 3. This is 3.5. So probably about half an hour on this one. Half an hour on this one. It's a bit of a shorter one, but still worth it. So yeah, we're talking about this, and we're talking about the trend on liquidity. We're talking about the macro, how that provides us an entry, the BPR, the balanced price range, the fact that that's one of the strongest PD arrays. I think from memory, right, someone asked me, who asked me, it was one of you guys, about what PD arrays I like or something like that. Balanced price range, you don't always see it, but if you see it, use it. If there's confluences to use it, use it. If you wanted extra confirmation, you wait for this bearish gap to get disrespected, and then you go long from the closure of this candle, stop loss below that low, targeting what you can do. Yeah, that's it. I'm not too fussed. This would be part two of the masterclass. So that's that macro there. Let's go to the next macro, and we'll just continue from where we kind of left off. So we have 1050 here, and we have 1110 there. Now here's another interesting one for you guys. We rated this level of buy side liquidity, right? There also is trend line liquidity here, right? So that's important. And is there an entry in that macro? Is there an entry in that macro? You could use that bearish fair value gap if you wanted to. These candles up here are an order block, right? So let's assume you went short right here. Why would that maybe not be a good idea? You'd have to go above equilibrium, right? So above equilibrium in this SIBI, maybe go for a short on this candle, stop above that high, and where would you target? Well, that would be a low-hanging fruit, and maybe you get stopped out at break even again. That could happen to you. If you held on to that trade, but you can see you eventually do take out the trend on liquidity, right? So you can see macros are important. They deliver price how you want them, which is really important to use. And it's one of those things, right? Now, for those that are here now, because we've got about 9, so it's quite a localized call, which is probably good. Is there anything that you guys want to know in particular? Or any questions you've got at all that I can kind of answer for you while I'm here? Because we might get more people joining. But for the meantime, is there anything you guys Breaker, Jimmy Patel. Breaker, let's do the breaker. Yeah. Breaker block. So what I might do, I might get a fresh chart out. I've got a fresh chart here. Anyone else want anything, like any PD arrays? So the breaker is obviously one PD array. Breaker, standard deviation, I do. So we already went through this example. I don't know if you saw this, but we might as well go through it briefly again. This here is your breaker block. Now, just to form a pattern for you, let me just draw something up here. This is what forms a breaker block, by the way. And the lowest down close candle between those two highs, one of which raises the other, there's your breaker block. So if you apply that to here, higher, low, higher, high, and lower, low, which raises or creates a shift in structure, then that becomes your breaker block. That becomes your breaker block. So fair enough, Jimmy. Or use volume analysis for the confluence. Using that example, where would be the entry for the 1 minute time frame? Okay, cool. So 1 minute time frame, you could still treat this as a breaker block, but if you don't want to do that, then you could have used this sell side imbalance, buy side inefficiency right here. So you would have entered from a CIBI, and you would have trusted the macro again between 250 and 310 to deliver price. So you'd enter from this CIBI, you go short from here, stop loss either above that high or above this order block or above that high, whatever you want to do. There's a market structure shift right here, and you target this accumulation. That's what you do. It'd be pretty quick for a 1 to 2 as well, but that's kind of what I'd say. Yeah, cool. So we've got a few things here. We're going to go through all of them. So we'll go through bullish breakers, bearish breakers. We'll go through standard deviations. Yeah, okay, cool. And Legion, I find that if you miss an entry in the 1 minute, go to the 5 minutes. Yeah, cool. So Legion, to illustrate your point, here's like a good example. Like that there, that down close candle technically is a breaker, right? Now, in this case, it's one candle. Can you see that? But when I go into the 30-second time frame, there's multiple candles. So that's why I've highlighted multiple. So that's what I mean in my video about how sometimes it can be multiple candles, other times it can just be one candle, if that makes sense. That's kind of an example of that. OTE, yes, I do. I use that. So we're going to go through. I might write a list here, right? So we got breaker blocks. We got optimal trade entry. We might talk about standard deviations a bit as well. And just the 1 minute time frame. We'll focus on the 1 minute time frame because I know you're going to pay extra for the 30 second too, right? Which is fine. Now here's the thing. Here's an example of a breaker, right? Now people class breakers differently, and it's one of those things. Even ICT talks about, people use these PD arrays wrong. But for a bullish breaker, this is kind of what you're looking for. And I'll draw this out, right? So you've got a low, a high, a low, a low, right? So you've got a rate of liquidity that occurs. Then you've got a market structure shift to the upside, and the last up close candle here is a breaker, and you wait for price to return into that, and you go long. So if you apply that here, you've also got this. So I'm just going to draw it out so it kind of makes sense. Same kind of pattern as this. So if you grab the last up close candle there, that's this one here. You extend that across in time. Price returns to that breaker block. What else also rests in that breaker block? There's also a bullish fair value gap, which is right here. And that's what they call like a unicorn setup. That's like a bullish example. The thing is, yeah, this, right? This as a mitigation block versus a breaker block. It's something that I want to talk about and compare the two. And we might add that to the list actually. It's gone somewhere. But we'll talk about mitigation blocks too, because Personally, what I like to see with a breaker block, I like to see the green candle be the highest candle of the run. Other people class this as a breaker block because it's the last up close candle. Other people say that it has to be the last candle on the actual swing high to be classed as a breaker block. So there's two definitions there. For me personally, I'd still class this as a breaker, even if it is a mitigation based on your, I guess, definitions. It's still going to be a PD array. Does that kind of make sense, Pepe? So either way, there's still going to be a PD array there that you can execute from. You get me? Now, mitigation blocks, and there's an example somewhere here, I believe. Now, did everyone see ICT's trades? ICT took a couple trades. Now, mitigation block, I'll show you what a mitigation block is. And I'm going to mark out the mitigation blocks and tell me if you can kind of see what I'm marking out here. I'll mark them out in purple. So I'm going to mark a mitigation block there and also a mitigation block. Technically, it's those two candles. But that's a mitigation block there. And let me know if you can kind of see what I'm marking out there. Because he posted a trade, right, ICT. He posted a trade and he executed right from here. Have a look, right? Have a look on his I've seen that inversions, fair value gaps, and breaker. Yeah, super lines of defense. Super lines of defense. Super lines of defense. And obviously here, as you said, there is an inversion fair value gap right here. So this is stacked. That's stacked to the brim with PD arrays, like so many PD arrays. So it's high probability, that one there, which is nice. But that's a mitigation block, right? That's a mitigation block. This candle here is also a mitigation block as well. And let me just draw this out. Now, personally, do I use mitigation blocks? Not really, to be honest with you. Like, I find there's enough setups with fair value gaps, inversions, BPRs, and breakers. Like, there's way more than enough setups with those PD arrays. But that's what a mitigation block is. So essentially, how it works and why you entered from here is because number one, there's a mitigation block, right? I'm just going to draw something out here for you. Number two, if I grab my Fibonacci from this swing low to this swing high, that mitigation block you probably executed from underneath equilibrium, which is nice too. Right, so that's another confluence there as well. And the reason why this is a mitigation block, right, is because if someone's offside, right, if someone's offside in the market, they can mitigate their losses. They can mitigate their losses. So as price trades back up into this, it's called a mitigation block. So say someone's going long from here and they're down, then they can mitigate some of their losses when price comes back up, if that makes sense. And then you can treat that like an inversion where you return to that again and then we bounce off that. Same with this, that's a mitigation block. Say someone went long here, when it comes back up, they mitigate some of their losses, trades back down into it, and what do we trade back into as well? This bullish fair value gap, that's an opportunity to go long. So mitigation blocks, they got to be paired with other factors too, and they're good for trending markets, mitigation blocks. When the market's really trendy, it's good to use mitigation blocks in that case. But when you want reversals, I prefer using the breaker blocks, if that makes sense. Does that kind of make sense, Pepe? Okay, cool. Good question, Legion. So this is ICT chose a good example here looking back, because notice how you got these two green candles and then there's like a massive move to the downside. Can everyone see that? So that massive move to the downside, you know how many people would be put offside so quickly? It's a very quick move to put traders offside. So what traders are going to try and do, they're going to try and mitigate some of their losses. So as soon as this happens and you got that push down, I'd immediately think, okay, well, that's potentially going to be a mitigation block. If we trade back up into that and then trade back down into it here, I want to see the mitigation block being respected. So if I want to take an entry off a mitigation block, which again, I think only a handful of times I've done it because I found opportunity with other PD arrays, but what I want to see is I want to see the mitigation block hold. So for me to use a mitigation block personally, I want to see the mitigation block hold. So we trade back up, we reverse, we trade back into the mitigation block, and I want to see like another PD array disrespected. So it would be nice if there was like there's there is a fair value gap here, for example. And for me, if I was going to use a mitigation block, I'd want to use that as an entry, as an inversion, right? But personally, that's too far up in the move, so I'd want to see something more down here. Your stop loss then, you know, if you saw an inversion somewhere here, you might be able to put your stop loss just below that mitigation block, which is fine. But at this point, it's too far in my opinion, because your next level of low-hanging fruit, I mean, it's just a 1 to 1.2, so it's not as great. Yeah, does that kind of make sense? And like, same with, this is a good example here, actually. I'll talk about this one, Legion. So this is your mitigation block here. We come outside of it, we trade back into it. So whenever we trade back into this up close candle here and we're trending in one direction, think of it, it could be a mitigation block. We've got a bullish fair value gap that we respected. And then what else do we have here as well? We inverse this fair value gap as well. And we find some accumulation here. So guess what? For those that are here now, risk with mitigation is, yeah, exactly. So that's the thing with mitigation, because mitigation blocks, when you're stepping, like say this is the price action here, and the price action's going down. Each of these lows here potentially form a mitigation block that price is going to return to. But what that also is forming potentially is trend line liquidity, and we know that the market likes to target trend line liquidity. So it's a bit of an issue unless you have multiple confluences and a clear draw on liquidity, which is why, you know, I prefer not using them. They're good to look at, but I prefer not using them, if that makes sense. We've got 19 here now. We're building up. So this is Masterclass 3.5 today. Exactly. Let's write that out here. Imran, beautiful. Support becomes resistance, and resistance becomes support. Support becomes resistance, resistance becomes support. So in this case, that should be a supporting factor, right? Resisting factor, sorry. But then it gets used as support. And the same for this, the opposite, right? We use this now as resistance. That's a great way of actually doing it. Look at 640. Took buy side, so you'll be confused like I would. Exactly right. So this here would be like a trend continuation model, right, that you could use. But personally, like I said, I like to go for reversals because the probability is much higher in my opinion. When you've taken liquidity, you're in a key time frame and you're in a macro, for example, and you've got a clear target, it's much easier. It's much easier to have a clear target than just trying to ride the market, you know what I mean? That's my opinion anyway. But people have different strategies. That's kind of what I roll with. Because we really took out this swing high here. Now for me personally, guess what? I would not even be trading in this time anyway. It's not like a tradable time for me. I mean, it's not what I want to do. But just saying, guys, this also sits within a macro, 650 to 710. See that? So 10 minutes before, 10 minutes after every single hour. So that's another confluence to enter in the trade. Just another thing for food for thought. I'm not saying do that, but just to explain what it is. One thing, I'm going to leave that there. One thing I want to talk about now is this. Inverse fair value gaps. Just in the chat for those watching, if you know what an inversion fair value gap is, say yes, and you've used it before. If not, say no. Just so I know. Just so I know who's watching. So if you used one before, you know what it is, say yes. If not, say no. Cool. And for those that are saying yes, do you have a definition of what makes an inversion fair value gap better than another one? Not yet. Because this is something. This is some good source as well, this one here. So, inversion fair value gaps. Bread and butter for a lot of setups. Right? So, there's two things I like to see with inversion fair value gaps that make it high probability. And this could be something maybe you write down. I might just add it to this one. The first is this. I like to see accumulation in an inversion fair value gap. So, for example, look at this one here. we inverse this fair value gap and we're accumulating. That is accumulating long positions. After accumulation, there's usually always an expansion. Usually an expansion. After accumulation, usually there's an expansion. After accumulation, usually there's an expansion. So I want to see ideally accumulation, because that way when we expand, we should be able to take out that liquidity point. So that's one thing, right? That's one thing. The second thing I like to see with inversion fair value gaps, just using this as an example, is ideally, right, I like to see some impulse, right? Now, when I mean impulse, I don't want the candle to close all the way up here. If the candle closes all the way up here, I've missed the move. But I like the candle to close not just above, but above a little bit more than the actual, the inversion fair value gap, because then it'll give me an opportunity to actually go long if I wanted to, like this. If the candle closed up here, imagine I enter if the candle closed and I put my stop loss there. That's a massive stop loss. It's too much. It's too much. And yeah, that's another good point too. If you can have an inversion, this is a great example here too. If you can have an inversion once you've taken liquidity, even better. You've swept liquidity, right? If the buyers are still in control, if the algorithm's still in the sell program, then this should hold and go lower, but it doesn't. So that tells you something. And the fact that sits within like a macro tells you something else as well. So that's another important point too. But guys, you can go back. Look, I'm going to go back. You know what? I'm going to go back. Let's just go back to some random day here. Let's go back. Where are we sitting now? January. Okay, cool. This looks really nice. This looks familiar, to be honest with you. Who remembers me talking about this? This is the very start. If you've been here for the whole time, I drew out this. What's that look like? And what bias would you have? What bias would you have if you're down here? What bias would you have? And why? Does anyone know? What have I marked out there? Yeah. And down at this point, what bias probably would you have? Power of 3. Bullish, exactly. So bullish, power of 3, bullish. So these things repeat, guys. I just chose a random day and I just saw it in the market. I don't know that this happens on this day. It's probably somewhere back in my journal. But I just scrolled to a random day and the power of 3 happened. It happened last week too on Wednesday if you're looking at it, London session. Now this is London session too. So what happens here? The manipulation comes down. We take out that level of sell side liquidity. Great. Now, this is another example, by the way, of a balanced price range or an inversion fair value gap after taking out liquidity, right? So we've rated liquidity and we create this inversion fair value gap here. Now, what did I say? What did I say? What's one of the things I look for from inversion fair value gaps? AMD, market maker buy model, yes. Long bias after manipulation, yes. What's one thing I look for in inversion fair value gaps? What's one thing? Accumulation, right? And trust me, look at this in the charts. It'll happen. Don't be afraid. Some people are afraid, it's going to reverse on me. Nah. If you've got a clear drawn liquidity and you've seen the power of 3 play out, where's midnight open? Somewhere around here, right? Accumulation at midnight open. That's a massive power of 3. So guess what? You're going to get a move up. Now, the way you'd execute off this, well, that created an inversion fair value gap. You technically go long right away from here, or you wait till it retraces. Like, it's up to you. You could do this, stop loss below the low, and you target, 1 to 2, but you don't get it. See that? So what you should do is wait for a retracement if it gives you an opportunity to do that, and then put your stop loss a little bit tighter. So here's how I would kind of manage this, right? Here's how I'd manage this. I would wait for a retracement ideally, right? When price retraces here, I'd go long. My stop loss I'd place below these bodies. There's no reason why this balanced price range should break. There's no reason why. And if it does, I'm wrong, right? So this way I get a 1 to 2 risk to reward much earlier. You could also use this wick. This is like an advanced thing to do too, but you can use the halfway point of the wick and you put your stop loss just below the halfway point, a couple ticks, you get a 1 to 2, right? So these are ways that you can manage your stop loss if you're curious, by the way. but that's an inversion fair value gap. Beautiful example of how you can use an inversion fair value gap. And then what happens, right? We trade up, we take out the accumulation highs. We talked about this earlier too. We talked about trendline liquidity. Guess what London does? London sets the tone for New York session. Look at that trendline liquidity. Look at that. That is perfect. And look at how we trade past that. Bang, one smack. We take it all out and we take out London lows, right? So if anyone trading the AM session that's in this live stream, that's some sauce. That's some sauce. And yeah, unicorns as well. You could even go for a long, by the way. Like, here's another thing too. You could go for a long from this fair value gap if you wanted to. It just depends. It depends on how you want to frame things. You know, it depends on your entry model, your entry techniques. You could hold this, right? You could take whatever profits you need to. Depends on what you're doing. I love your live trading sessions. Yeah, I want to make more of them, man. When I'm in the office here, then I can use the desktop. The iPad I can still record, but it's not as good quality, and the screen's a lot smaller. So that's another thing too. But I'm going to get onto that this coming week. More live sessions. What I want to do, ideally for you guys as well, is do some pre-market analysis, and then I'll kind of stitch the videos together. Do some pre-market analysis, talk about a trade I'm in, show the trade, and then obviously like post that later on. But I might do a live trading session or something. We'll see where we go with that. You know what I mean? So that's really important. Again, trendline liquidity, really, really important. So I think I might leave it there, guys. I appreciate everyone joining this stream. And I've been training roughly for about 8 months. 8 months. It's been roughly 8 months. So I learned ICT. I started learning last May, I believe it was. It's been quite quick moving now in the last couple of months. That's what it's been. I do have a Discord. But now it's question time. If you got questions, let me know. Yeah, learned last May. A lot of learning, trial and error, failed accounts, as what happens to most people. The main thing, I said this to the guys in the Discord too, like, don't focus on the money. Focus on quality trading. That's my advice for you guys. And if you're going to do a funded account challenge and you can't afford to lose it, don't do it. That's my advice. Save up, right? Because you don't want all your eggs in one basket, because there's too much pressure. You don't want pressure when you're trading. So yeah, ICT I stumbled upon 8 months ago, last May. I did try out some retail trader stuff before that. Never had success with that, but I really went hardcore with ICT. The more screen time you get, guys, the better. Forward testing, back testing, forward testing. And I think we're not live anymore. We'll see what happens. But yeah, I want to tell people, and that's kind of why I created the YouTube channel. And add trend on liquidity, that's cool. No, that's alright. We are still in, okay. If it quits out, it's probably because of the internet again. I just got a notification, so we'll see how we go. But yeah, appreciate everyone's support. Now, I do have a Telegram. I'm gonna post this in the community tab maybe with my Linktree link. Now, my Linktree, for those that are still here, my Linktree has multiple things, right? It's got my Telegram. The Telegram's free. It's free. In my Telegram, I just post screenshots of either trades that I take or trades that I see that I miss, that are great, right? Telegram's free. There you go. YouTube's free. There you go. Twitter's free. There you go. If you want the Discord, that'll be in there too. It's quite cheap at the moment, to be honest, guys. Compared to what other people are doing, it's quite cheap. And this is what it is, right? All these ICT concepts have explanations there. I call out trades in this trade ideas section. I've got chart snapshots that are previous trades I've taken. I've got weekly reviews I've done, PDFs of that, right? And obviously like our member success portal with people's success, right? I'm working on a couple things here at the moment, but that's kind of what we're doing, right? So if you're interested in the Discord, that's there. I do have a private mentorship as well, which you just mentioned. So I got a couple of students at the moment. So if you're looking to get into that, go for it. One-on-one is you're going to be having calls with me twice a week. That's what it is. So you get calls with me twice a week. I'm going to give you homework if you're new, and I'll give you things to study, educational resources. If you're on my Discord, you get access to me. Right? If you're in the private mentorship, you also get access to me, but you also get those 2 1-hour calls per week, which guess what? We can go through anything. You know, if I'm in the Discord, we still can talk about things, but we can have a face-to-face call like this, or even over Zoom, which is what I do usually. And it's kind of like a masterclass, but based on what you want. I can do Forex, I can do indices, doesn't matter. It's all the same. I've traded both, doesn't matter. And depending on your experience level, we'll start from the basics and work our way up. Or like one of my students now who's more experienced, we can talk about more experienced things. It just depends on yourself. Does that kind of make sense, Sophie? But yeah, the Discord, that's the Discord. I'm going to keep making these videos too, so you guys, whatever like you want to do, you do that. You know, I'm not pushing you to get to the Discord. It's your choice. I appreciate that. Best Discord out there. Yeah, it's grown quite a bit. And the good thing about this, guys, and you know, you could probably back me up. We've got such a good community here. I'm not trying to talk it up or anything, but everyone helps each other. I've been in Discords, and someone else mentioned this that just joined, where like there's too much nonsense going on. Right, there's too much nonsense going on. We're all helping each other. We've got people trading Forex, people trading indices, people trading AM session, PM session, London session. It's a great community. I don't have TradingView Premium. So if you want to look at NAS 100, you can look at NDX 100, depending on TradingView, you probably won't have it. You can look at US 100 as well. That's another option for you too, man. So there's a couple options there. Free Discord at the moment, no free Discord, but here's where you can find me for free. And guess what? I post so much resources there as well. So if you're looking for I'll post this in the chat, by the way. If you're looking for my Twitter or my Telegram, which are both free, the name is Fullviewtrading, right? And what I might do, I might just get the link. Up for you guys. So give me 1 second. We'll get the link up, and then we can go for it. So Linktree. This will have all my stuff on there, right? So that way you don't have to, look anywhere else. So I'm gonna keep posting things for free. Don't worry. I'm gonna keep posting things for free. They're still gonna be there. So I'm just gonna get this link now, and I'll copy this link. This will have everything in there. I'll post this in the chat now, guys. So that's the link that you want to visit, right? That link will take you to my Linktree page, and that'll give you access to what you need to get access to. So I hope that kind of helps there. That's gonna have my Telegram, by the way. My Telegram's free. I've got heaps of photos there. Good for study, really good for study. Obviously, I've got this YouTube channel. This is like a free resource as well, a great free resource as well. And then the Twitter, which I've just started as well, that's all free. The Discord's more of like a private thing for the minute, and it's better that way. So if you want to go for that, go for that. If not, these videos are always going to be here, and that's completely fine. Does that help everyone? Like Joe, Imran, Sophie, is that all good for you guys? Let me know. Does that link work? Yeah, cool. And again, if you got any questions, you might follow me on TikTok already. You can send me a message there. You can leave me a comment. I'll get back to you as well. Sophie, yeah, I think, yeah, I recall. But yeah, Sophie, if that's something you're interested in, let me know, because we'll figure it out. Obviously, you're already in the Discord, so we'll figure something out for that. But I hope everyone got something from this. This is the 3.5 Masterclass. So what I'm going to do, there's like a very short video. I think it's like 19 seconds. I'll get rid of that. And I'll leave this one up and the other one up. So about 2 hours total. And we've gone through, by the way, I'll upload this probably tonight or tomorrow morning. This is like a summary of what we've done. Right, just some things here to consider. Yeah, which is cool. If you haven't already, give this live stream a like. Again, I appreciate all you guys' support. We've come over 1K now, we're almost at 2K. So we're trying to grow this channel. And hopefully you guys find some value from this. That's all I kind of want from this YouTube channel. I find it interesting. I like teaching people, and you know, if you guys get something from it, that's all I can kind of ask for. So yeah, there we go. Masterclass 3.5. I'm off now. All the best. And tomorrow, obviously, we're in the markets. Monday, looking forward to it. And we'll touch base then. If you have any questions about Discord, about trading, leave me a message on TikTok, or just send me something on YouTube. I'm completely happy to answer that. But until next time, guys, I will talk to you then.